Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I'll share my analysis of the historical trends of stock commodity brokers sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. So the stock commodity broker sector consists of companies which act as intermediaries, facilitating trades between buyers and sellers in financial markets. They earn revenue through brokerage fees, commissions, and margin based trading services. The key services that they provide includes equity, derivative, and commodity trading, portfolio management services, research and advisory services, mutual funds and IPO distribution, and margin funding and loan against shares. The key growth drivers includes rise of retail investors and technological adoption and F&O popularity. The key challenges that this sector faces includes regulatory changes by SEBI and market volatility. So now in order to identify trends in this sector, I'll present two graphs. They are the end result of my analysis of the share price movements of last 10 years of top 10 companies of this sector. The top 10 companies of this sector includes 4 large cap, 2 mid cap and 4 small cap companies. The first graph will show the yearly returns, whereas the second graph will show the monthly returns. So let's start with the first graph. So this is the yearly returns graph. The green bars here shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line over here, this shows the cumulative returns percentage. The green line here shows the number of months with positive returns, whereas this red line shows the number of months with negative returns. So let's start with 2015. 2015 was a very good year for this sector with 46.82% returns with 6 positive and 6 negative months. In 2016, this sector gave negative returns of minus 6.46% with again 6 months gave positive returns and 6 months gave negative returns. 2017 was a dream year for this sector, and this sector managed to give 246.19% return in a single year. 11 months gave positive returns, whereas 1 month gave negative return in 2017. In 2018, everything crashed down, it seems, for this sector, and the sector managed to give massive negative returns of minus 45.66% with 7 months giving negative returns and only 5 months giving positive returns. In 2019, again, the sector gave negative returns of minus 9.7% with 7 months giving positive returns and 5 months giving negative returns. The situation improved dramatically in 2020, and the sector managed to give returns of almost 60%, 59.91% to be precise, in the year 2020, with 9 positive months and only 3 negative months. In 2021, again, this sector skyrocketed and it managed to uh, give returns of 227.58% in 2021 with 9 positive months and 3 negative months. And in 2022, again, the sector gave decent returns of 17.39% with 8 positive months and 4 negative months. In 2023, the situation improved further, and the sector managed to give a very, very good returns of 51.32% with 9 positive months and 3 negative months. In 2024, again, something extraordinary happened with this sector, and the sector managed to give returns of 90.06 percent with 8 positive months and 4 negative months. So, an outstanding journey so far, it seems, in this sector. Let's see the takeaways before doing so. The cumulative returns. The cumulative returns in last 10 years is 4,000%, more than 4,000%. That means more than 41x in last 10 years. So the first takeaway, the cumulative return, that is 41x in last 10 years. CAGR of 45.06%, and I would say dramatic returns, an astronomical CAGR of 45.06% in the last 10 years. But amongst all this, there were three net negative yearly returns as well: 2016, 2018, and 2019. This sector managed to give negative returns. Best year 2017. 2021 too was a exceptionally good year for the sector, but in 2017 the sector performed the best with 246.19% returns. Worst year 2018, the sector managed to give negative returns of minus 45.66%, and positive to negative year ratio is 2.33 is to 1, which means 2.33 positive years against every one negative year in the last 10 years. Let's see the next graph. This is the monthly returns graph. The green bars here shows the positive average monthly returns, whereas the red bar shows the negative average monthly returns. The green line shows the number of years with positive returns, whereas the red line shows the number of years with negative returns. So let's start with January. In January, the sector has managed to give 5.01% average returns over the last 10 years, with 8 times in the last 10 years it gave positive returns, and only 2 times it gave negative returns in the month of January. February seems to be the weakest month for this sector, with negative returns of minus 3.57%, with 8 out of 10 years giving negative returns and only 2 giving positive returns in the month of February. March, another weak month for the sector, with negative returns of minus 1.89%, with 6 negative and 4 positive returns in the last 10 years. April seems to be the best month for the sector, with 10.79% returns, with 9 positive and 1 negative returns in last 10 years. May seems to be a a good month for this sector, with 4.15% average returns, with 7 positive and 3 negative returns in the last 10 years. June too seems to be a decent month for this sector, with 2.33% average returns and 5 positive and 5 negative returns in last 10 years. July, a very good month for this sector, with 8.19% returns, with 9 positive and only 1 negative return. August, good month with 2.45% average returns, with 7 positive and 3 negative returns. September, almost flat returns over the last 10 years, 0.48%, with 5 positive and 5 negative years in the last 10 years. October again seems to be a very good month for this sector, with 4.91% returns, with 9 positive and 1 negative year. November, an above average month with 2.10% returns, with 5 positive and 5 negative returns in the last 10 years. And December again seems to be a very, very good month for this sector, with 9.91% average returns, with 8 positive and only 2 negative returns. So let's see what are the takeaways from this graph. Cheaper months, February and March. Quite clearly, February and March are the cheapest or the cheaper of the 2 months in for this sector, with minus 3.57% and minus 1.89% returns respectively. September too could be considered as a cheaper month for this sector, with almost flat returns of 0.48%. Costlier months are April, July, and December. So April is the best month uh, for this sector in terms of average returns over the last 10 years. So 10.79% average returns in the month of April. July is another costlier month with 8.19% returns and 9 positive returns again in the last 10 years. And December with 9.91% average returns and 8 positive years over the last 10 years. And finally, the positive to negative month ratio is 1.86 is to 1, which is 1.86 positive months against every one negative month. So over the last 10 years, that means 120 months. The ratio is 1.86 is to 1. So that is all from my end in this video. Thanks for watching. If you have enjoyed the content, please like the video and subscribe to the channel. Share your feedback in the comment section and share this video with your family and friends. Thanks. I'll be back soon with the next video. Goodbye for now.